Test, test, test. See me. All right. Looks like we are good to go. Hey, everybody. Hope you guys are all having a great day. This video is sponsored by Trading, so go to make sure to check them out. They have been great hosting me so far, and they have a great platform. So today we're going to be talking a lot, a lot about inflation here, and then maybe later on today we'll talk about some other stuff. Loki's over here. He saw me talking with you guys, and I think he wanted to say hi, but then he went to go grab a toy, so I'm not entirely sure. Loki, up. Yeah, he just got very excited. Oh, you guys can't even see him because I got the different camera angle on today. But he's having a good time. Okay, so a lot of stuff to talk about here today. Really, like I just said, most of this is going to focus on inflation, and we'll do a couple other videos later on in the week talking about more of the other stuff like the Bitcoin spot ETFs and stuff like that. So today, the goal really is inflation. How was it? How good was it? How bad was it? How are the markets reacting to such things? And what do the markets think are going to happen over the next few weeks, okay? Because I think each market is going to be going its separate way here. Maybe the crypto market might be a little more bullish and things like that, okay? So, happy to see all of you guys in here. Let me make a small move here. First, let's just kind of go over what the news reports were from CNBC and Fox Business. Fox Business is a little bit weird, so I'm actually not going to have any audio playing right now. It's been just a torment because they keep on trying to make their videos play and all these ads play, and it's just been blasting in my ear, so I've turned off all sound for everything, so you guys don't have to worry about that. Let's see. Oh, and I just got a news announcement from Watcher Guru, by the way. Spot Bitcoin ETF trading volume surpassed $4.5 billion on the first day. That is awesome. All right. And that'll be going into the crypto talk we'll be doing a little bit later on here. So, big thing here from both Fox and CNBC. Consumer prices rose 0.3% in December, higher than expected, pushing the annual rate to 3.4%. So this is kind of that bad scenario that we had been talking about for the past few months. Just talking about, whenever we have the uptick and it's not really forecasted, that's when you guys are going to see things get a little bit more choppy in the overall stock market, okay? So let's talk about exactly what happened here and, what this pretty much means. Because it's not necessarily, it's not good news. As much as I would like to try to spin it that way to make everybody happy, it's not good news. So let's go through the story here, and we'll also read through the Fox story, then we'll kind of get an idea of what happened. We'll skip the video part here. If you guys want to watch these videos, you can find them on TradeZing or YouTube or any of the other sites, right? So, key points from this article, though, just so you guys know. The consumer price index rose 0.3% in December and 3.4% from a year ago, compared with the retrospective estimates of 0.02% and 3.2%. All right, so hotter than expected. Excluding volatile food and energy prices, the so-called core CPI, core CPI also rose 0.3% for the month and 3.9% from a year ago. 3.9%, that's a lot hotter than 3%, right? Compared with retrospective estimates of 0.3% and 3.8%. So everything was hotter there as well. Breaking news. Okay. Let's see. Much of the increase came due to rising shelter costs. The category rose 0.5% for the month and accounted for more than half the core CPI increase. Wages adjusted for inflation posted a 0.2% gain on the month, while rising a modest 0.8% from a year ago. So people's income is not rising with inflation. It's still not good. It's still not good. I would say it's better, but it's just not good yet. Inflation is still going to be getting worse month after month after month for the average guy out there. We know that since last year, inflation has come down, but let's not pretend like prices have come down along with it. Now, we can kind of go in a little bit more into the weeds here about what was actually gone up and what had gone down. Prices that consumers pay for a variety of goods and services rose more than expected in December, according to the Labor Department measure Thursday that shows inflation is still holding a grip on the U.S. economy. I think if you guys have been listening to the news or just kind of YouTubers, TikTokers, other people out there, I think you guys all know that inflation is supposed to be getting what they call sticky, where we're not moving up that much higher and things like that. When we're not moving that much lower, or it just takes a little bit longer to get through that final stretch here. And I think this data is starting to bear that out, especially if you put it with the last few months, and I'll pull up a chart here in a few minutes. The consumer price index increased 0.3% for the last month, higher than the 0.2% estimated at the time, when most economists and policymakers see inflationary pressures easing. On a 12-month basis, the CPI closed 2023 up 3.4%. Economists surveyed by Dow Jones had been looking for a year-over-year reading of 3.2%. All right, that's pretty much just regurgitating what they just said a couple paragraphs ago, so I wonder why they had that in there, but they do it all the time. So you got all items right here. That's where the uptick is coming in. Less food and energy, it's still coming down a little bit. It's kind of like plateauing here. You're finding a little bit of a dip. I think that's actually pretty good news here. All right, you can pull up the chart right here. We're not going to look at this chart by CNBC. Instead, we're going to go over here to the trading economics chart because I just like it a little bit more. You can see that uptick right here. And that uptick, man, I don't know why. I didn't expect it to be 3.4. I thought if it was going to be hotter than expected, it might come in at 3.2, 3.3. But wow, 3.4 was a little bit more on the upside. And then you kind of saw this reflected in a lot of the charts earlier this morning. If you go over here to the Dow Jones 1 hour chart, you can see early morning hours. We had this little, I don't want to call it a crash, but it's kind of a dumping effect because everybody was worried about what was going on. You saw the dollar index in the morning go up, and then what happened? You saw everything kind of go back down. So we're going to talk about this in a little bit, but that was a surprising bit of news that we got. You saw the same concept on the NASDAQ, the SPY, Dow Jones. They all had that similar dump right there. So going back over here now, this is where things, I think, get a little bit more tricky for the next year and a half. For the next few months, you might see the stock market get a little bit more choppy. And we'll talk about the other factors here when we start pulling up the charts here in a little bit. But a little bit more choppy is not going to be a bad thing because it gives you guys an opportunity to start loading up on some positions or maybe selling off some positions that you guys wanted to move that money over somewhere else. It gives you opportunities here. Now, 3.4%. We haven't been this high since it looks like August or September. September looks like here. Yeah, sorry. September here. And with that 3.7% here, guys, or 3.4%, we might actually end up creeping back up here. The reason that this is a concern is because there's really two things being decided right now by the Fed. And they both have a little bit of a historical context behind them. The first thing is, okay, inflation's staying high. I don't think at this point they're going to be raising interest rates anymore. I don't think they have a reason to do that at this point in time. The other thing is, it's taking much longer for this to happen. So because of that, they might just not start cutting rates in March like everybody, like the market right now, if you go back to the charts, it's priced in for rate cuts in March. If that doesn't come to fruition, for whatever reason, let's say inflation stays hotter than expected, then you're going to see the stock market continually come down for a little bit. The other thing going through their mind here is basically, well, let me just say point one actually before I forget. Point one, they're basically saying, okay, we're not going to raise rates, but this means we're probably going to leave rates higher for longer, which is what they've been saying all along. But the market has ignored that, and they've priced in something a lot hotter, which is why you've seen the stock market continue to grind higher and higher and higher throughout all this drama over the past few months about, government pricing and stuff like that. Now, the other thing here, the second thing, what I think is more important, but it kind of encompasses a longer term event, is when you guys go back in history and you guys look at the last 25 years or, even the max here, let me put on a column chart. There you go. Let me make sure you guys can still see me because I got my head in a different spot now. Basically, you guys see these peaks, right? You see the peaks over here from the 40s, you see the peaks over here in the 70s and 80s. When we have high inflation like this, we usually go in peaks. So everybody, and I believe Jerome Powell understands this very well, he wants to make sure we don't have that second peak. Maybe we might have a little bit of an upward move, maybe back up to 4 or 5%. I don't think he'd raise rates in that type of environment unless he got back above 6 or 7%. And I don't even think we're heading back up to plus 5%. Let's hope I'm right about that. But basically, let's go over here to, can I actually do a specific time here? I don't think I can. 10 years? 25 years? No, it doesn't go back far enough. Oh, wait, here it is. Yeah, okay. Maybe because I'm zoomed in, this looks really, really bad. So let's go to 65, 2024. Maybe that works out. Nope, I might have broken the I might have broken the chart. I don't think people are supposed to be doing that. Okay, but anyway, he understands that you don't want to be dealing with these peaks, so he's going to try his best to make sure that inflation at least doesn't go back up. At best, he just wants it to moderate and then from there go down, right? So that's kind of what we're looking at from the data coming out. It looks like inflation is going to be a little bit hotter going over the next few months, guys, so just be prepared for that. Usually when it happens, it doesn't signal that the stock market's crashing. Last time we had the high inflation over here, we just dipped down for a little bit. Now, the NASDAQ took a little bit of a brunt, but overall, you can see it's not like we were crashing like we did back in 2022 with the bad moves. It was a few months of consolidation. You saw the NASDAQ doing something similar and the SPY doing something similar. I think we're fine there. And hey, Nicholas, hey, Brian, hey, Clifford, and hope you guys are doing well. Let me go over here very fast. So that's really the concern, I would say, for me at this point. Because the data wasn't the best, it symbolizes to me that we're probably looking for an extended downward move in the market. Different things could change this. Maybe the PPI coming out this week, that could be something. Loki, what are you doing? My dog's trying to jump on something that's like way high, and I'm like, why are you doing that? But basically, that extended move usually happens in these types of environments. So I'm basically just waiting to see what happens next as far as the technicals are concerned. Just because I think it's going to happen, I'm going to wait for the technicals to say, hey, this is something you should be concerned about. And at this point, the market, if I just zoom out on any chart, you can clearly see the upward momentum, just like you saw it over here. Well, I don't want to start shorting because I don't know exactly when the top is going to be. I want to make sure that I can see this downward move. Usually it's going to be happening on a weekly chart where I can start to see some things slowing down. In this example, all you see slowing down is the stochastic. You can see the stochastic slow down right over here. Had the official breakdown right here, and then we went down for a couple months, a few months here. We're not even there yet. We're about to be on the stochastic. The MACD is still fine. The MACD sell signal didn't even come over till here, and the RSI sell signal came over right here. So when it's only one, we haven't even had a change of character. If you guys want to start getting more bearish on the overall stock market itself, really, you're just looking for us to make a low breakdown below 466, which is about a $10 loss. But that is a lot compared to where we've been going. We've been kind of choppy over the last few days. So you can actually even see over here, we had a sell signal go on the MACD and the RSI. Stochastic didn't turn bearish until right here, and that one didn't even work out because the overall trend was so bullish here. So I'm patiently waiting to see how all this turns out. I think we'll be fine in the long run, but that's only because even here with Bitcoin, when you guys are looking at the market and as in total, what's an easy way to explain this without going too much into the weeds? We're in this push and pull type of environment because inflation is now going back up, not a little bit more dramatically than I think I was expecting, but not crazily. We have inflation coming back up. We have the market pricing and rate cuts in March, which definitely isn't going to be happening now. That's kind of a cycle for the market having a pullback. But now we have to keep on watching to see how economic data is doing. Are people losing their jobs? Is unemployment going up? That type of stuff. That could actually, as weird as it sounds, if that starts to go up, that brings in more of a chance of a rate cut, which is better for the market. So there's going to be a lot of yin and yang stuff going over here for a while. I would say until the market decides that bad news is bad, we really haven't had the market do bad news is bad just yet because, as you guys know, economy has been fine for a while. Inflation is pretty much the only thing really moving things. And, we only get inflation once a month, basically. So as long as we've been fine, we're good. Like the last time we had inflation come down was October. Bitcoin blew up in October along with the ETF news. The Dow Jones over here. October found the bottom. So I guess you could say it didn't necessarily rip, but it found the bottom. NASDAQ found the bottom in October, and the SPY found its bottom in October. So you pretty much bottomed out once inflation. You're like, okay, now we're fine. And now we're hoping for higher moves. Now we're on the reverse side of that, where we're not fine. We have inflation going higher. Probably not the best thing going forward. And even over here, if you guys look at Bitcoin, I would say crypto is actually doing a very good job today because we're pretty much where we started off a few days ago. There's been a lot of drama this week, and you guys know how bad of the SEC came out looking really bad this week. Let's just call it, really, really bad. The hacking, them saying X was hacked and it wasn't really X that was hacked. The media getting it wrong, and it was just a chaotic event. And then them doing the posting of the news that the ETFs were approved too early and things like that. Then they had to withdraw it and put it back. Just a crazy day, a crazy week for the SEC. However, this morning we had the data come out. We had this trading come out when it came to the spot Bitcoin ETF. We had that pop. That was really nice to see. But we also came screaming right back down because, of course, the dollar index was actually screaming back up here. But this is why I want to draw your attention to it. The dollar index went up. It's back down to where it was kind of earlier this morning, like, early hours of the morning. And so we're still stuck in this sideways move. As long as we're here with an opportunity to make a lower high in the future, like maybe we continue to drop down and over the next few weeks, that's enough for the market to move higher in the face of rising inflation. Now, will it happen? It's hard to say. For me, you can see everything is fairly bullish on the daily charts. The weekly charts are pretty bearish, so the weekly charts are going to push a little bit more than the daily charts, I would say. But all it takes is a few weeks of us just going sideways. That's enough for everything to turn bullish. And if the dollar index starts to go more bullish here, that's when things look really, really bad. And you guys can see over here in July when we did have that previous uptick of inflation, right, from 3 to 3.2 to 3.7, you saw the dollar index just start to rocket. At this point, I don't think we're seeing that rocket happen, right? We're still in this consolidation mode. We'll see how things turn out. If I can find the exact date, that'd actually be good to know. No, that's not what I'm looking for. We'll do a post on it. CPI dates. So October 2023. So we're missing it by just one here. So it was somewhere down the middle of the month between like the 10th or the 15th, let's say 10th or the 14th. Yeah, 13th to the 14th, right around here. Yeah, that's where we kind of found that bouncing motion right in there. So just keep an eye on the dollar index. Right now, I think we're in a little bit of a different technical space when it comes to the dollar index. You guys can see the two death crosses coming here. You can see the 20 slowing down, which means we're actually going to have a golden cross pretty soon, just like this one. I don't know exactly what's going to happen here just because of all the data that still needs to come in. But again, the dollar index looks like it is primed to go back up. We'll have to see if the data can keep pushing it that way with the PPI data coming out this week. And then just, the jobless claims and stuff like that normally will coming out this time. But it's not what the market wanted to hear. We just talked a little bit about CNBC and what's going on there. Next up, let's look up Fox News. A little bit of the same thing, but without, I don't know, there's so many more ads on Fox News. I don't know what they're doing. But there was one thing. There you go. So there's one thing I wanted to talk to you guys about here. Altogether, the report indicates that while inflation has fallen considerably from a peak of 9.1%, it remains above the Federal Reserve's 2% target. High inflation has created severe financial pressures for most U.S. households, which are forced to pay more for everyday necessities like food and rent. The burden is disproportionately borne by low-income Americans who are already stretched. Paychecks are heavily stretched, affected by price fluctuations. And then, was there one more part here? No. Okay, it's not there. Okay. So that's kind of the big thing here, guys, for today. Now, let me go back over here. I did want to find out rent inflation. Let's go 5 years. Column. Rent inflation continues to come down. That is great. I know we talk about this every now and again just to kind of show you how expensive the rents have been getting all across the country because there's just so many factors that get involved with that one, but they're not good factors, right? But rent inflation continues to come down. Now, rent inflation, what was it today? Does it say exactly what it was? Like a little above 6%, it looks like, but I can't find out the actual number. Yeah. Monthly 23. Actual, maybe, yeah. I think it's a little over 6%. So that's still a 6% increase on last year, which is much higher than the regular inflation out there. So just get ready for housing. Housing is still going to be expensive for a while, but maybe in like 2 years, it'll be back down to not going up as fast. But guys, it doesn't look too good. And A-Flame, happy to see you back. Hey, Larry. Doom. I know this gives a lot of bears and shorts a lot of opportunities here to be much more pessimistic about the overall market. That is for sure. Um, Hey, Michael, what's your take on why the Bitcoin ETF is not pushing us up over 50K today? Um, Probably because of the chaos that we saw this week. You know, we had the CPI news. That's one thing going on this week. It was not good CPI news, so that actually killed a lot of the buzz because, again, you saw when it comes to stock markets over this. Let's go back to the 5-minute chart. You saw how everything pretty much started off the day like, let's go. And then within just a few minutes, it's like, boom, we're down. Bad inflation data, we're down. Same thing happened to Bitcoin. Look at that. Oh, boom, everything's good. Inflation took us down. So inflation still has a hold on Bitcoin. I know people buy Bitcoin as an inflationary, hedge against the U.S. dollar because the dollar eventually is going to go kaput here. But it can't outdo inflation. Like when you go out, and if you guys were watching CNBC or Fox Business on Bloomberg, there was some great data out today with those ETFs. A lot of volume. The spreads were really good. Bitwise, I think, had the worst spread of like 5 cents or something, but everybody else was, I think, doing fairly well. And so it was good news. It does mean a lot of good things for the long-term longevity of Bitcoin here. But really, that inflation took everybody out. And so, once the realization hit it, I think people just freaked out a little bit, sold off some positions. I think we're actually very lucky that we're not lower, like as a whole, as the market, like stock market and crypto markets. I think we're actually pretty happy that we're not as bad as we are right now. Usually it does take about a week for these things to kick into the market, so we'll wait and see if Bitcoin has a prolonged move down or if the NASDAQ SPY and things like that have a prolonged move down. The best thing for you guys, though, is if we do go into some type of bearish move here that lasts for a few weeks or something similar, or maybe even a few months, kind of just go back in a little bit and see what happened in July to your favorite positions, your favorite stocks, cryptocurrencies, things like that. From there, you guys are able to see, okay, this actually didn't perform too poorly, or this one did perform really bad. Like if you go look at it like an Apple or an Amazon, they didn't perform too bad, I would say, when it came to the past inflationary little hiccup that we had, I would say. Same with Bitcoin here. Bitcoin went down quite a bit, but it's not like it was like unexpectedly like a huge breakdown or something. We saw this move from over here to over here. That's pretty typical. Let's see, we had that happen without high inflation. It's something that Bitcoin does. It's nothing out of the ordinary here. You go over here to the NASDAQ. This move looked pretty nasty, didn't it? Coming down for a few months, looked a little bit more dramatic. But if you went over to, looking for different stocks out here when the inflation was coming back up, Apple, it wasn't terrible. It was fine. I guess you could say it looked dramatic, but still, it was just an opportunity to load up before a breakout. Amazon, it was okay up until like maybe the last 2 days of the dip. AMD, well, AMD was going down long before July. It was going down since June. Disney was going down a long time before that. Google was pretty much sideways. I think Google, like they had an event in October, at the, I wouldn't say because of inflation, it was an earnings report, but I think it's just because of all the AI stuff that was coming out, and they were like, we need to rush Bard out. We have to compete with OpenAI and stuff like that. But there were some opportunities to buy. But if you look at a lot of these stocks right now, MACD on Google has been kind of bearish for a while. It's about to go more bearish on the stochastic, and the RSI is more mixed. So you could start to see some more bearish moves here. But, just add on your favorite technicals. My favorite technical is a trend line. Wait for those trend lines to break along with the bearish moves. That's what you're looking at. Don't expect to move all the way back down to like, these lows that we saw in 2022. That's a recession type of move. But, expect to move back down here to the next order block. That's reasonable. That's fine. Daily charts, bullish-ish. 4-hour charts turning bearish. This is actually pretty interesting because it's actually at a nice little top right now. Managed to break out before that bad CPI data came out. And I think you're okay. The banks are in a little bit more of a rut after, I wouldn't say bad earnings, but I would just say poor earnings. Oil at this point in time, this is my favorite one, PXD. It's coming down after a breakout, but you see the breakdown right there. MACD turned bad here, so the sell signal was actually right here. You see those types of moves, but this is more of, what's going on in the oil markets and stuff like that, overall economy, import, exports, yada, yada, yada. But with inflation spiking back up, it's going to make things a little bit more rough here, guys. You know, it's just the way it normally works out. But usually it takes a few days, because every time I say this, somebody will come on and say the market went up today. It's not actually in a bad spot. And then like a few weeks later, then we're just like, oh, it's never a good time. Let me get out of the NASDAQ drawings right here. Let's go to the daily charts. You know, most stuff is in an okay spot. It's gone up quite a bit. Day trading is still ideal here rather than swing trading, but just get ready for some slowdowns. I won't even say crashes. I'll just say slowdowns, because they're not necessarily really bad days. It's just like weeks upon weeks of us going down for a bit. But I wouldn't say it's necessarily dramatic. If you go on the news, they might make it sound dramatic just because they'll start talking all about negativity. It'll be negative headlines. And I think that's just to get views. We've kind of been through this a few times here, so we kind of just understand the way the news kind of regurgitates everything off there. And hey Flame, hope you're doing well. I knew I wouldn't what I don't get is why streamers don't see it. Streamers like me or other people out there, you know, I view myself as a little bit different because I'm much more just kind of playing, and I'm like, okay, let me see what I can get from it, you know, a little bit different than trading. So other streamers out there, their main goal is to get you to watch them for longer periods of time. I've showed you guys this plenty of times. Remember, right now the average person is watching my stream for about 6 minutes and 18 seconds. It'll probably go up as the stream goes on to like 9 minutes or 10 minutes. But if you go to a very hyper streamer that's selling you what you want to hear is like, oh my gosh, this was the best day ever, Bitcoin ETF, we're going up, and only up. And with Bitcoin, you can actually go higher than what I think the regular market can right now. We'll talk about that in a few minutes. But just all up all the time. It, you know, the YouTube algorithm out there will promote that heavily. So they're just doing what the algorithm says they should be. Now, you know, is it ethical or whatever? You know, who am I to say? But, you know, probably not. But they make a good living off of it. They have a lot of people who are entertained by their channel, and a lot of people who find joy out of watching stuff like that. There are people who lose money because of talking like that, but you know what? It's just kind of the way the system works. Most YouTubers that are streamers that talk about this type of stuff, they're not actually traders or technical analysis folks. So they are kind of giving you the information that they think you should know, but maybe they themselves really just don't understand it all too much. So it can kind of go either way. Like, I talk about inflation even when it's not inflationary days. I try to draw parallels throughout the months to show you, hey, if this happens, there's a good chance this is going to happen alongside it. That way you guys know what's a few possibilities are, so you guys are kind of more prepared. The algorithm does not promote that because it's very boring talk. And I'm okay with that. Yeah, honestly, I'm okay with that. And so that's the way I kind of feel about it. But yeah, the streamers are going to be saying the same thing. All I got to do is go through Twitter, follow a whole bunch of random streamers, and just see all their comments and what they're saying. You know, it's interesting, right? The easiest way to pretend that you know what you're doing is just to buy in dollar cost average on the way down and then ride the wave up, right? Now, I've done some live trades with you guys before, but I just do that to kind of like, guys, I still got it. Something like that, right? But it all depends. You know, when it comes to like the CPI data, like I said, it's a hard one to get into. All you have to know from a streamer's perspective is right now, CPI up, CPI bad. And that, you know, that's good enough. For me, that's fine. Now, what does that do to the market? There's all types of speculation, and that's fine. You know, I'm not going to say I'm 100% right or they're 100% wrong. Not like that. But yeah, it's a difficult subject to talk about. Even when you guys listen to the people on CNBC or Fox, they are saying this was like a non-event. It wasn't too bad. Well, Fox is actually saying it's a little bit worse. CNBC was like it's not too bad. It's not too bad. And we'll see if this actually wasn't too bad. One of the things that I was going to talk to you guys about a few minutes ago, or I did talk to you guys about a few minutes ago, was the dollar index. The weekly chart for the dollar index is still pretty bearish. It's slowing down, but it's still pretty bearish, right? And if the market continues to go down, that's really good for inflation. That's really good for the overall market because that'll keep on pumping other assets up. Now, when it comes to Bitcoin, Bitcoin's kind of in a weird spot because technically You got a bullish RSI on the weekly charts. You got a bearish stochastic on the weekly charts, and you got a bullish MACD. So bullish MACD, bearish stochastic, and a bullish RSI. And at the same time, you got a bullish chart. You're looking at a golden cross happening between the 50 and the 200, although it's never happened before, so we don't actually know what it's going to do. But it's the first time it's ever happened. So that's kind of nice to see. We had a bearish death cross over here before the 50 and the 200, but this wasn't a technical event. This was something of the banking crisis, Silicon Valley Bank going down, things like that. And so with the higher CPI, I'm looking at the daily chart for Bitcoin. We're still moving higher bit by bit. We managed to get all the way up here towards like $49,000 today. That's really great. I mean, that's awesome. Now, where do we go after this? I still do think there's an opportunity for bulls to pump it up a little bit higher. Not for a technical reason at all, but I would say the daily chart, everything is all lit up green here, which is kind of nice. But you can see this death cross that's coming for us. There's an opportunity for Bitcoin to pop back up to like maybe $52,000 to $53,000. It's not likely from a technical perspective, but from a whale just looking to like go straight at it, we've seen it happen too many times now for me to go against the grain just yet. And then from there, you could definitely see how we can get up higher. I just don't think, when I'm talking about streamers again, I don't think they will actually articulate that. They'll give you technicals, point to it, but the technicals don't really support what they're talking about all the time. And I think that's just the hard part of watching a lot of streamers these days. But you know what? If people want to watch them, let them watch them. They'll learn, they'll mature, whatever. They'll come, they'll go, whatever. I've had people come in here for a few months, then leave, then come back a few months later, then leave, then come back a few months later. I know. I'll say hi when you come back. It's no hard feelings at all. But basically here, despite all this, altcoins seem to be having a good day as far as with the CPI data coming out. Got Ape up, Arbitrum still going, AVAX still going, AXS, Bitcoin Cash making a move, BNB, Bonk, right? So things are looking okay right now from an altcoin perspective, which I really, really like. I told you guys my Fairdesk position, it was like down like $400 the other day or something like that. And right now I'm down $132, so I'm not down as much. And when I only had 2 green things yesterday, now I have at least 1, 2, 3, 4, 5, 6, 7 green positions here. That's what I like to see. But that's dollar cost averaging. There's a good chance with the way the market's going, this will all turn red here for in the next few weeks, and I'll be like, hey, now I'm down $800, now I'm down $1,000, and I'll keep on dollar cost averaging, dollar cost averaging, dollar cost averaging. And I think that's what these big moves that could be coming here as far as inflation, that's where I think you guys are going to be able to make the most money. If you guys look over here on the 4-hour chart for Bitcoin, the Dow Jones, NASDAQ, or SPY, you can see everything is fairly doing well over the past few days for different reasons. The stock market earnings are ending up being okay, not great, but okay. Economic data is still turning out fine. So like I said before, you could still see the market come up a little bit more before something of a worse pop, right? I think even if we go back over here to July, it's July, that's 2022. Okay, here it is. Geez, I went way too far. When CPI data came out, we ended up going up for a few days before eventually coming down. I still think that's 100% available to us at this point. You're seeing that crossover here on the 4-hour chart again. The MACD and stochastic are starting to turn over, which is good news. So I think we might have another pop in here, but it's just the next few months, it doesn't look like it's going to be that great. Right? So don't be fooled if we have another pop. That's why I say, the overall market, it still has some juice in it. You look at the 20-day moving average of the Dow Jones. We're resting on top of it. We're at a resistance level. We can break out. We can also break down, but we can break out. NASDAQ getting closer to that resistance level here. Already broke down below the 20, but this thing does not care about the 20 moving average at all. I don't know why. I think it's just because it's so volatile. Just does not care about it at all. What's right here? Hey, Jazz Tech. Can I explain the dollar index? It's better a question for ChatGPT, to be honest, because of the tediousness of it. But basically, when you're talking about the dollar index, it's basically the dollar compared to a bunch of other currencies, like, dollar versus the euro, dollar versus the Chinese yuan, dollar versus the Japanese yen. And then usually in this type of environment, when the dollar value when the dollar index is going down, that's a really good thing for markets. Markets want to see that, and that means more of a risk-on environment, and that means you should see stocks and cryptocurrencies going higher. When the dollar index goes higher, like it did a little bit today, based off of the bad CPI data, the market will usually come back down off of that because it's indicating more risk, and nobody wants to take on more risk. So if you look over here very fast, monthly, see this huge spike over here in 2022, right? Remember what was happening in 2022 to the NASDAQ? Woo! Same type of concept, okay? Right now, it's been coming down quite a bit. You've seen over the last few months, November and December, things have been looking good. October, we plateaued a little bit, but really, November, December, really coming down quite a bit on the monthly chart. Dow Jones, November, December, really having a good move. NASDAQ, same thing, having a good move. SPY, really good moves. That's the basic premise of how we talk about on this channel. If you want the detailed stuff, usually the best place to go is either ChatGPT, or you can go to the dollar index by Investopedia, right? I do not trade the dollar index. That's something I don't do. But basically, here it is, right? Measure the value of US dollar relative to a basket of foreign currencies. That's a more elegant way of just saying the other currencies I just said, but yeah, basically that. But read this. It'll give you a lot more information than I just gave you, and it's kind of just nice to know a little bit more in detail. You will forget most of it. It is extremely boring, but for the purposes of what we talk about here, what I said pretty much is the gist of it. Let's go back over here. Bitcoin was weird. Bitcoin's been tearing it up for a while, but that's also been a big news event. It's still going, guys. As far as like zooming out on Bitcoin, we're still in the thick of it. You know, once we have our first monthly red candle, I think that's going to be a lot worse. But right now, we're really in good shape. You know, just like the rest of the market, I know CPI is bad, but I think we still have at least 1 or 2 more weeks of going up before things start to look a little more bearish here. Ooh, excuse me, guys. Don't know what. Oh, yeah, I know why I'm burping. I'm talking too much. That's why. You know, but you can even see there's a lot of stuff ready to pop or drop, but the way the momentum is going, you just trust the momentum until it doesn't work out in your favor. Then you can start going against that momentum. Conflicting Bitcoin signs, last of the highs coming soon. Well, you know, it depends on what you guys think about highs here because of the CPI data. So when it comes to Bitcoin and things like this or any other chart, you have more bullish moves on the weekly charts, but the bearish chart, the daily charts are maybe a little bit more bearish. You look at this, and we're still doing fine. We just started a new breakout this week. You're basically going to be bullish on Bitcoin until we have some type of really big disaster event. And that's where Bitcoin drops a lot, and then it has to break down below support. Like over here, we had an attempt at a disaster event over here, right? And within a few hours, we had dropped about 10%. Well, if within the next day we ended up falling back down below this level of support over here, that's where things would have gotten really bad really fast. But we didn't get that bad because everybody was waiting for the CPI, not CPI, the ETF announcement, right? So right now, that, you know, that's the way we're looking at it. And I've been the first one to kind of tell you guys when it comes to Bitcoin and the markets out there, and CPI. Oh, go back to the other one. There you go. I'm much more spooked now because of the higher CPI. Much more spooked. But it doesn't mean immediately today I'm going on shorts and puts on everything. No, I'm going to be waiting until the data says so. Now, when it comes to Bitcoin, I might have said this to a fault. Like, I just might have said this too many times. But the way I viewed it was back a couple months ago when Bitcoin was kind of having this like sloppy grind up effect. What I was telling you guys is, hey, Bitcoin is very bearish right here. It's very bearish right here. It's very bearish right here. And over the next few days after I would tell you that, Bitcoin would have these really drastic moves down, right? But normally when I trade, I like to hold for a while. And so I'd be waiting to sell. I might scale out a little bit, but then I'd be like, okay, let's see what happens next few days. But what happened? It would skyrocket back up. So basically what I ended up telling you guys after that, and I learned after a few attempts of trying to make a lot of money and just really losing money or kind of breaking even. Well, no, actually, I lost money on that one. What am I talking about? What I ended up doing is just saying, okay, I'm just going to go long from now on, And then if I see a big drop, I'm gonna buy into it once the 15-minute chart breaks above the 15-minute moving average. And I would try to play those up, and then I would do some longs when I see a breakout incoming, and I'd be looking at that, and that was much more profitable. But I had to go through some pain there for a while before I learned that lesson. And so I'm still sticking with that type of mindset right now. Has it changed a little bit because of CPI getting more hot? Yes, it has. However, the technicals are getting more mixed when it comes to all the assets, like a stock market, cryptocurrency, and things like that. But until I see them completely roll over, I am just so... I'm being very, very careful here is how I try to enter into this market, because when I buy puts, I really want to load up on puts this cycle, and I really want to watch them come down for multiple weeks, and I'll be scaling out like 20% of my puts a week, 20% a week here, 20% a week here, and then as we kind of have this lower high where we pump back up to make another high on the way down, I'll load up on more puts again, and I'm just going to be doing that over and over and over again, and seeing how that really goes. But like I said, if you go over here and look at any of these charts over here as far as the stock market, AMD, it's choppy. It's kind of more bearish and neutral at this point. If you look at the stock market here, weekly charts still bullish. And those weekly ones are what I'm looking for in the short term here. You can see the sell signals for the MACD started getting over here, but you can kind of see the stochastic and the RSI bearish right here. So you have a while. You have the change of character also from here to here. I know they have another change of character there, but from here to here, you have a change of character. I'm looking at that. But you see what happened here when you had the puts? When the MACD turned bearish, what happened? I only had to wait a couple weeks before the moves would come down. If I were to start loading up on my puts right here, a whole bunch of nothing happens. Theta kills my puts, and then you're not good. But if you want to be day trading every time there's a breakdown here, then you're more inclined because the overall mood is down. So let me show you something here. So this is AMD. This is probably one of the more difficult ones to trade. Usually, if you want to be trading a larger move down, you're going to be looking at something more like a Google, or you're going to look at something more like an NVIDIA. Their technicals just work a little bit better for me when I'm trading. Medic is also very good out there as well. But I think even just trying this strategy on a more difficult one, this is what I would say. So we have the day where at least the MACD and the RSI went negative. And then we can also put out the day where the RSI went negative as well. And then you could also have the day where the change of character, or the change of character happened right here. See, it's just a little bit of a mess here. Let's go over to the hour chart. Okay. So we already have a bearish change of character here. Let me pull up color candles, just so you guys can see that a little bit easier. There it is, color candles. You guys can see those are all red. All right. So traditionally, you guys can just go off a change of characters until it turns more bullish if you want to. That kind of works sometimes. For me, I'm looking for when my data says, say, sell. So at this point, my data is saying sell right here on the bottom of this bad candle. All right. Now, you might have wanted to get in there beforehand. Sure, you could have, but it would have been over here. Was another sell signal. So you got different opportunities. This one looks a little too easy for us at this point in time. Let's not go for the easy one. Let's go for the hard one where it's at the bottom of a big dip so you feel like you're chasing into it, but the technicals are still saying buy. That's a very hard thing to do sometimes because you're like, most of the time when I see this, I'm like, I'll just wait until I get another better setup and things like that. But anyway, you see it coming down, and what you're looking for basically is going back in time and you're looking for a support level of which you could be like, okay, let me get rid of this other line like right here. This is the one, the 4 hour. Let me just turn this line red, not red, blue, and then let's make it be a very thin line so you can't see too much of it right now because we're not paying attention to that blue line. And what are you doing? You're looking for some support levels. You can draw your own order blocks. You know, programs like Luxalgo, they have them kind of built in there. But if I go over here and just have these two lows right there, what's going on? There we go. Drag them along. You could have your first scale out moment when it enters here. And because you know it's more of a bearish move going on, when you actually hit this zone, you're going to move your stop loss to be somewhere down here. There's been a lot of crazy wicks, it looks like, on this one, so it may be a little bit more difficult. But you can move your stop loss to the high of the previous day. What is not the high, but this peak right here. Oh, that's a pretty high peak. Maybe just right here. You could move it to right there if you wanted to, but that'd be kind of weird because it's like that's the move that's actually going into the order block. You'd be looking for something a little bit further back. But basically, you'd be moving up your stop loss or moving down your stop loss in this case. All right, and then you have the 4-hour chart coming on here. That might make you say, hey, I'm going to be more aggressive and double down if we break down below this one. You know, and then you have another sell signal, which means short in this example, right here. A few days later, or over the next couple of days, it works out in your favor, right? Now, it becomes a little bit more difficult because you're looking at that next level of support, which is over here. You can see how we kind of get a little more blocky, things like that. For this one, I don't think I have many order blocks set up on it. Yeah, I only have like the show last 2, but if I went over here, show last 10, it might pop up. Oh, I'm so far into the future. Yeah, it's going to mess things up. Hold on a second. There you go. Now you can see all the order blocks and how they may be moving. Beforehand, I might even reverse this just a tad before all this stuff actually happened. You can see all the different order blocks over here. I don't know if there's an order block right here. There should be, but there's not. That annoys me. But yeah, you can see all those support levels. Then you're doing those types of trades there. Day trading or doing these smaller few day trades, they're going to work out very much in your favor. But don't be afraid to go to those longer ones as well. Let me back out of here very fast. But this is what I'm hoping to do when it comes to this inflationary move that we're probably going to see over the next few weeks. But again, like I said, AMD is a difficult one. If you want something easier, go to NVIDIA. Just because it's so volatile, go to 1-hour chart. Well, actually, was there a selling moment in here? Yeah, there was one in here where the daily was negative. Up to around here, we had negativity. Go to the 1-hour chart here. You had to change your character, turn bearish right here after hours. You really didn't have many sell signals in here. Oh, no, this isn't. Well, here's one. Okay. Sell signal right the first hour of the day. You ride that sucker down. You can wait till change your character if you want to, and you ride that sucker down. Now, me, I might have just gone out at the end of the day because of how big of a move that was. But yeah, that was a much nicer setup. But see, you could have made money, I guess, if you shorted right here when everything was negative. But I guess it all started off over here. Negative. But yeah, there wasn't too many in this little package. There wasn't really. So I wouldn't have made that trade. Even though you see it went down, I just wouldn't have made it. Over here, and better setup, it took a couple more days, and you're like, oh, look at that setup. Okay, I like it, you know? And then you figure out what you want to sell. But a move from, you know, let's just even call it here to here, that's a 3% move, 3.5% move. That's great for options, especially if you're trading out of the money. It works every time. Not every time. I shouldn't say every time, but it works quite frequently if you kind of have that system built up where you know your limits. You're waiting for the precise moment to strike. You're not just striking blind. You're just patiently waiting. It goes a long way to helping you guys out. Now let me get rid of all these order blocks because it makes the chart look crazy. I normally just have 2 on here. And then, you know, an easy one to probably try to trade is probably just going to be the SPY. That might not be too bad either. Hey, very happy to see you back, man. Sup, Loki? Loki's over there chilling. And hey, I'm happy to see you guys as well. I'm just streaming about the CPI data right now. That's mostly the topic here. NADK Wilson, you have the most constructive streams, Michael. Sadly, people weren't hype over substance. I mean, honestly, like I said before, I think it's fine. Hype over substance is kind of the way the society is kind of built at this point. And you have to remember how YouTube's business model works. You know, then we'll start talking about CPI again. But basically, the way it works is the longer you guys watch, the more ads you guys can see. The more ads you guys watch, the more money the creator would make, which would be me, and the more money YouTube would make. And in theory, the more money or the better deals you guys would be able to see as the consumer. But you know what? I think it's just fine. It's fine. I like doing these constructive streams because I feel like you guys remember, I have ADHD, and when we're talking about CPI or PPI or technical analysis when it comes to any of these charts, My whole goal is to explain things to in a way to you guys where something just clicks in your mind, like, oh, because that's how it works for me with ADHD. So that's what I'm talking about there. I think I do a decent enough job with it, but just these little things I think work well, and so that's why I'm going to be doing more technical analysis tutorial videos, maybe about 10-minute videos, 15-minute videos, maybe up to an hour videos, I'm not entirely sure, where I start breaking down some of this stuff to you guys, and those videos tend to get more views over time because people are searching for something. I have a better explanation than a lot of other people out there, and I'll get a lot of views for it. And I think that works out pretty well. That's how I get subscribers and things like that, grow the channel along with streaming and doing short form content. I think it works out pretty well. Let's see. NADK, am I trading with leverage? Usually yes. When it comes to the stock market, no way. What I do in the stock market is I trade options. I'm originally, before cryptocurrency, I traded options for a living. So it's much more my ballpark. That's why I was like, okay, there are certain stocks that I trade. I only like to trade 10 stocks. And especially when the CPI data kind of causes this little kerfluffle, which is probably going to be happening pretty soon, a couple weeks or so. I like to be in that environment, day trading like crazy. It's like my favorite thing to do. I enjoy it a lot, and it's fun. I enjoy it. I make money. It's fun because I make money. Let me clarify like that. But okay, everybody, I'm gonna take off now and go upstairs. My grandmother's upstairs, and she got here about like 10-15 minutes before I started streaming. So I just told her to go upstairs. I will go see you in a little bit. Now I'm gonna go say hi to my grandparents. I even have Loki down here, so Loki doesn't bother her. I have my door locked. Or not locked, but just shut. So yeah, I'll see you guys a little bit later. I hope you guys enjoyed this CPI stream. Feel free to go back and watch it if you guys feel like it. And again, this stream was sponsored by TradeZing, so if you guys would like, please go over to the website. Go check out some of the people that are streaming on there every now and again. And pretty soon, I think I'll be able to get one of my 24/7 Bitcoin streams up there, which will be great. In case you guys want to go over there, check out some news and check out some live Bitcoin prices, okay? So, hope you guys all have a great rest of your day. I should be live on a little bit later on today. It kind of depends on what my grandmother wants to do. She may want to go out to dinner or something, so I'm not entirely sure. But I'll keep you guys updated. CPI was not good today. It just wasn't. We'll have to feel out how bad the repercussions are over the next 2 to 3 weeks. And every single day up until then, we'll be talking about how are things going. Are we tipping over even more, or are we leveling out? Things like that, okay? Thanks, everybody.